Alrighty, let's get back to the second half here. Labor Day's calling me too. I don't know, maybe go out to the park with my significant other and see what happens. But anyways, I am happy to say that movies are back. I've been doing a lot of those. So, we had the Panic of 1837. These are the things that happened in Wall Street. Notice the 7. Lock that in your brain. Number 7. What does number 7 mean? It means that the 7th year or the 8th year of each year, all the way up through till 9, to right now in 2020. In 2018, late 17, Trump enacted what Wall Street's been doing for forever, which was basically creating a pullback in the market. They cannot pay you all this 401k money. They cannot pay you all this IRA money. They don't have it. It's unconfirmed, unfunded obligations. It's confirmed income that you're supposed to get, but you'll never get. So they pull it back. So basically the 6% is a complete total waste. A lot of people think, well, I still have my house and I can go ahead and write my taxes off with that. And, that's the amount of interest that you pay is almost double, 2.5 times what the value of the house was and what the original loan was anyway. I say you're an idiot if you're thinking that that's a good way of buying a house. The way we would suggest you put the money together through our plans with InStar Alliance. And if you can't, or you've already purchased, and many of my clients have already homes and mortgages, then we get you out of debt. So this is the stuff that I wanted to do. Okay? They mentioned early that these people basically, weren't overly excited about making income, though their income had, exploded through the small businesses that we talked about in part 1. But they wanted to have a purpose. That's my purpose. If I can save maybe 1,000 people, 2,000 people from going down the road to ruin, end up putting money together, and then they retire, and they come out with $1 million in the bank, tax-free, I think that I've done my job. So anyways, as I said before, as you go down this list, this is a list of all the activity that went through to the federal government and Wall Street. Some more newer ones was October 1907. 7. Lasting over a year, markets took fright after U.S. President Theodore Roosevelt had threatened to rein in the monopolies that flourished in various industrial sectors, notably railways. We don't talk about railways much anymore, but they're still out there. The Wall Street crash of 1929. Now that one actually fell off the boat because that should have been on the 7th. But I'm sure that if I look further enough into this, I'll probably find that it'll be in on the 7th, and it was a series of events working up, and then it just went gangbusters wild in 1929. Lasting over 4 years, the bursting of a speculative bubble in shares led to further selling as people who had borrowed money to buy shares have to cash them in when their loans were called in, also called the Great Crash or the Wall Street Crash, leading to the Great Depression. Recession of 1937 to 38. Yay, we're back to the 7s again, and 8 I mentioned earlier. Lasting around a year, this share price fell was triggered by economic recession within the Great Depression and doubts about the effectiveness of Franklin D. Roosevelt's New Deal policy. Okay? Ooh, look at here. Let's see. We have another thing that affected our markets was the Brazilian market crash, and it was in July of 1971. But outside of that, though, we've got the Panic of 1907. We have the recession of 1937. Early recession here, we have Black Monday. October 19th, 1987. What the hell? Every time I turn around, it's the 7th, because that's when they take your money, you idiot. Okay? Your money's going to be taken on the 7th. Chances are you won't retire before the 7th. Or you've been hit so many times that whatever money that you hope that you could make, you ain't going to make it. Because they keep pulling the market back. They keep resetting the market on the 7th. Anyway, infamous stock market crash. That was October 19th, 1987. 7. Infamous stock market crash that represented the greatest one-day percentage decline in U.S. stock market history, culminating in a bear market after more than a 20% plunge in the S&P and Dow Jones Industrial Average. Among the primary causes of the chaos,
were program trading and illiquidity, both of which fueled the various decline for the year as stocks continued lower as the volume grew lighter. Today, circuit breakers are in place to prevent a repeat of Black Monday.
Well, that being the case, obviously somebody just lied to me, because we had 2007, and guess what? We crashed like it was free then, okay? Some thought he is lying. Let's see, we've got another one here. October 27, 1997. Global stock market crash that caused an economic crisis in Asia. Of course, we pulled back on that. And then the United States bear market of 2007. From the peaks of October 2007 until the closing lows in March 2009, the Dow Jones Industrial Average, NASDAQ Composite, and S&P all suffered declines of over 50%, making the worst stock market crash since the Great Depression era. Yes, I know it had to do with real estate derivatives. I do have a real estate background as well, and we'll talk about that in the future, but for now, we know that it was on a 7. Financial crisis, 2007-2008, and let's keep going with it. On September 16, 2008, failures of large financial institutions in the U.S. due primarily to the exposure of securities that pack subprime loans and credit default swaps issued to insure these loans, and the issue has rapidly developed into a global crisis, resulting in a number of bank failures in Europe and sharp reductions in the values of equity stock and commodities worldwide. Okay, then we have another one here. This one's a little off-ball. It was 2011, stock markets falls. S&P entered a short-lived bear market between March 2nd, 2011 and October 2011, a decline of 21.58%. The stock market rebounded thereafter, but then ended the entire year flat. Okay, the last one here was 2017, the China war, which eventually was caused, Trump caused the pandemic because of that. How did he cause pandemic? Because he kept playing around with these people's money, and he knew he had to do a pullback. He picked the wrong country to do that. They hit us with the pandemic. So you figure out the rest. That's what I'm dealing with right now. So anyways, I think you're beginning to slowly see here that there is a pattern that has involved with the stock market. So what do I suggest people to do? Don't invest in the damn stock market. I'm sorry. Don't invest in these federal-backed securities because they pull back because of the stock market. Don't invest in IRAs. Don't invest in 401k's. If you put the money in, stop investing in it. What should you invest in? You should invest something that's not affected by the stock market. If that's what you're looking for, like your retirement. Your retirement won't exist. You won't hardly make any money. Most people average $60,000 by age 67 if they haven't tapped into it now. And now they're allowing people to tap into these things. And why are they doing it? Because of the simple fact that people, are running short on money in some instances. Again, we'll talk about next week different options that you can look at for some types of residual income so you don't put all your eggs in one basket. Okay? I have one here from Tim Kaine, who tried to run for president. America's national debt, $16 trillion and counting. A complete, total, utter fabrication lie. Let's try 168,000, but they don't want to tell you that. And we've already discussed that again. In order for you to understand what I'm talking about, okay, you must go on YouTube, Anton Davies, 10 myths about government debt. You need to study that. I don't know what else to tell you. At this point, I would have probably, if you've worked with me, you probably would have done it by now. But again, if you haven't looked at it, which is insane, but I'm going to assume that just for giggles that you haven't looked at it, these are the ones that we go over again. Volume of 20 trillion, all of Western Europe purchases. What that simply means is you have to buy everything that's in Europe in order to even spend $20 trillion. Unfunded obligations owed to retirees through Social Security and Medicare. Unfunded obligations owed to retirees from state. Unnamed federal branches such as Fannie Mae, Freddie Mac, and the different contractors that work with it. Miscellaneous federal expenses. When you put the unfunded obligations together, both Fed and state, and these other branches, they don't even count. but they definitely fund them. It was coming out to 165 trillion. With all this 4 trillion that we burned up now, we're looking at close to almost 170 trillion dollars. There ain't no country on earth that could cover that kind of money. Okay, the surplus of gold, which you balance your currency against, that money, basically, is barely like 2/3 of a trillion. It's not even enough to even think about covering all this debt. So what happens, they just keep reprocessing and printing out more money, and then it devalues the money. So now a pair of gym shoes, again, if you watch Anton Davis, you know this, instead of being $30, it's now worth $300. In other words, the money becomes worthless. That's what happens to money. So in order to avoid doing that, we need to get friendly with China again. First, you got to get rid of Trump, because that idiot doesn't realize what he's doing. Most of the companies that he's complaining about, they happen to be American companies. And they were helping to pay part of our debt that we have, well, which we call servicing our interest on our debt of $168 trillion, which is about roughly $5 trillion a year. And that debt was being paid by foreign investors. So they were taking their money, even though we were upside down on the trade. And I'm not arguing that with them. But basically what they were doing at the end of the day, instead of taking their $5 trillion like they're getting ready to do now and build a 5K network to rival ours, they were taking that $5 trillion and they were giving it to us. Here, take our profits and let us put it into your bonds so that we can prop up your broke country called the U.S. and go ahead and keep your country afloat. The only other country that I can think of that recently was, I want to say it's either Greenland or Iceland. I'm not sure which one. I'm pretty sure it might have been Iceland. But, I could be wrong. Either one of those two countries, Russia ended up having to bail them out because of the simple fact that they could not sustain their debt to a point that they were bankrupt and their money became worthless. That's the option. That's the route that we're heading towards, slowly but surely here, okay? First, we need to go ahead and get money back into the IRS so we can start paying on some debts. Second, after Trump is gone. Secondly, then after that, once we have to do that, we have to raise taxes because our income is just at a point where we're just not bringing in enough, even when they were collecting it. I got relatives still waiting for their tax returns, and now we're pushing September here. We haven't heard anything other than getting a letter saying, stop asking us where your money is because we can't pay it. I should show you that letter, okay? Basically, they say, we'll pay the interest on $5,000. When the government's so broke that they can't even pay a $5,000 debt, I'm telling you, bankruptcy is where we are at. We're not coming out of it. And the road to an economic recovery can't be achieved without contact tracing. And we've had the conversation before, which contact tracing basically means that we keep track of these people who are sick, so then that way when they're sick, then we know about it, so then we won't get more people sick. You use the phones for that. I know though, Google and Apple are trying to do something. I don't know where it's going to go, but people are so worried about their own privacy rights, they don't realize that they're literally killing each other for their privacy rights. It's sort of like, I watched The Purge the other day. I was watching the movie. I like that movie. And a lot of things that I've seen. I've seen the Lincoln Memorial here. I'm outside of the D.C. area, all scraped up with all kinds of graffiti and everything on it. Fires burn. It looks like that. And with the riots and all the other things that have gone on this year, it's been a horrific year. But I'm telling you, we won't come out of it until we get some contact tracing. Getting back to dealing with the stock market itself. Investors carry on. No matter what, they're going to keep moving forward. You can either be victimized by it or not. You can use the stock market to actually make money, but if you use the stock market through a 401k or an IRA, you are done. You're wasting your money because you're going to fail miserably. What happens here, and I was reading about early on back in part 1, basically, you got to get out of the comfort zone. A comfort zone is this. Anything that's a comfort zone is really, really, really bad for you because it's for everyone. And for everyone means that everyone fails. This is what everyone looks like to the federal government. I showed this picture before. Ignorant sheep. That's basically what they look like. So with social security numbers. If you want to be this, then keep on doing what you're doing. If you want to change your life for the better, actually build some income, then you need to get in touch with us if you're in the DC area. If you're not in the DC area, there are other brokerages that are working with something similar to what we work with. Perhaps, maybe, they might have it in your state. I don't know how many states that have it. It's not a lot, but it's there. And there are companies that are working with us to help make a better future for people. That's what I got involved with this. That's why our business is part of it for, and we're in explosive growth and all the other things that I talked about earlier. Because of the simple fact that we're trying to help people. You have to go for private investments. You can't go for federal investments. You have to put your money in that so that it's safe. When you can't use the stock market for long term anymore. That was the old reasoning, old thinking. It's going to get you broke. It's going to get you working till you're dead. You're never going to retire because it doesn't work anymore. All the systems that you think of in the past that your parents taught you to be a loser with is over. They don't work no more. You got to follow the new paths. So next week we're going to talk about some different types of residual income. If you have questions for our company, you're in here in the DC area, we haven't gotten in touch with you. Our number is 703-646-3941. We run a normal business day during the week like any other business. And we can go from there. And like I said, think out of the box. You don't think out of the box, you're going to fail. You're going to fail miserably in life. Now, we can't help everybody. But at least if you're watching these tapes, there's a glimmer of hope for you. Anyway, enjoy the Labor Day weekend. I certainly plan to. And we'll be back next week. Bye.